Once you've made the decision to spend, give, or grow your money, it's time to get that money moving in the direction of your decision. Money is always moving between people, banks, businesses, and the government as people pay for goods and services. The ways in which money is earned and spent is called the economy. In this FitMoney episode, we'll follow the movement of money within the economy and the different ways we can move it, making everyone an important part of the economy every day. Let's take a $5 bill and follow it through one day. That $5 bill starts its journey in your wallet as cash. On your walk to school, you decide to buy a sandwich and pay for it with that $5 bill. That $5 becomes part of the store's money, which they make by selling goods like your sandwich. That store uses the money it makes to pay for supplies like the bread for your sandwich, and also to pay the people who work there. So let's say your $5 goes to pay the cook who made your sandwich. While you handed over a $5 bill in cash, the store owner will pay their employee, the cook, by check. A check is a piece of paper that allows the employee to deposit that amount of money at a bank. Let's say the cook earns $10 an hour. The government will take $3 from the paycheck immediately for taxes. So that $3 goes from the store's bank account into the government's account. While there's no cash going from one person to another, like with your sandwich, the money moves digitally from one account to the other. Then the store owner will give the cook a check for $7. When the cook deposits the check at their bank's ATM, the money moves from the store's bank account to the cook's bank account. The cook gets home and then decides to share some of their money and makes a $2 donation online to a local food bank using their computer. That $2 moves from their bank account to the food bank's account. This leaves the cook with the original $5 in their account to spend. The cook decides to spend that money to help pay for a haircut. They pay the barber through a payment app on their phone. So the money moves from the cook's payment app to the barber's payment app. With that money, the cook paid for a service, a haircut, and the barber will now have that money to save, spend, or grow. The barber moves the $5 from the payment app on their phone to their savings account at a bank. So again, the money is on the move from the barber's payment app to the barber's bank account. They're saving money to buy a new barber's chair, and the $5 gets them closer to that goal. While the barber's $5 and the rest of the money in their bank account is guaranteed, the bank will use some of the barber's money to make loans to people who need to borrow money and promise to repay it with a little extra fee in interest. Remember Vincent, who got the loan to start his bakery? Maybe the bank gives the $5 from the barber's bank account as part of the loan to Vincent. And we know that Vincent will pay that loan money back to the bank plus interest over time. The bank keeps most of the interest that Vincent pays, which is how the bank makes money. But the bank will also put some of that interest into the barber's savings account as a reward for saving money with them. So that $5 in the barber's account can grow to $5.25. So a key idea is, at the end of the day, your money is a big part of the economy. It paid for goods like the food, services like the haircut or business loan, and taxes. It moved in many different ways, and it kept people's lives going and growing. As you saw, there are a lot of different ways to move money. Just over the course of this one day, there was cash, there was a check, an ATM, online bank accounts, and phone apps. In your daily life, you may see people use other types of payment methods, like debit cards, credit cards, or gift cards too. When you use a debit card, your money moves from your bank account to the business's bank account. When you use a credit card, you actually borrow money from a company that you promise to pay back later. So in the moment, money moves from the credit card company to the business, and then later in the month, you pay the credit card company everything you owe. When you use gift cards, which you may be the most familiar with, the person, let's say a family member, buys you the gift card, and their money moves from their account to the business's account. Then, when you use the card keeps track of how much of the family member's money you spent. Don't be fooled by how quick and easy apps and cards make moving money. In each case, money is being spent and moved out of your wallet and into someone else's account, moving the economy along with it. Next time you spend or receive money, take a moment to think about all the places that money may have been and where your decisions can make it go.